Welcome back to Trading 360. I'm Nicole Petalides, live in New York City. It's time for the big three. You ready? 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist with BullseyeOption.com. Thank you both for being with us. So first, you're taking a look here at Micron. As we look at Micron technology, tell me all about this one. Your thoughts.
Well, Micron is a momentum stock. Now, it is stalled. It's up 175% from its 2-year low, but it's only up 15% here this year, in the last year anyways, compared to the NDX up 30%. So it's 10% off its April top, which was $97, and now stuck in a range between 80 and 90. So a breakout of that targets 100. The way I'm looking to play, again, is my stock substitution strategy. A January 80 call gives you the right to be long at that base of the sideways trade. That option is trading for about $8.50 right now. It's $6 in the money. If this Micron gets to 100, which is our target, the option doubles.
So there's been no love for Micron. It's been a little out of favor, Rick Ducat.
Right.
But he is saying, Alan is saying, there's something to be said here for some upside potential. Rick?
Yeah, and that 80 level seems fairly reasonable to me, too. If we could take a look at my chart, just jump right into it. I was looking at a year-long chart with some of our popular moving averages. I've got our 21 exponential moving average, as well as the 63 and 252. And the 21-day exponential moving average there in yellow, if you take a look at point A, there's a few interesting things coming together right around that same level. The 21 EMA is right about at 81.50. The old highs are that green line for resistance near about 82. And then just above that, we have our upward sloping trend line there in white. So all those things are coming together in kind of an interesting point here. And just looking at the broader trend direction here, if you take a look at point B, we have our 21-day EMA crossing above both of its 2 slower moving peers, and our orange 63-day EMA is also crossing above the 252. So we have a few different golden crosses here. One thing to be concerned about potentially is that RSI looks like it's slowing down a little bit here. We're out of that overbought area, and it's kind of lagging a little bit, but price has been just bouncing around here, so that's not really unexpected.
You know, let me tell you, Rick, can you elaborate on this chart a little bit so people fully understand? You talk about golden crosses and what we're seeing with the moving averages. Explain what's happening here with these moving averages and what the crosses mean to a pro.
Yeah, sure. So we have, there's a kind of a trade-off when you're looking at a moving average. The shorter the amount of time that you're using to create the moving average, the more responsive it is to changes in price. Now, the trade-off there is that the longer amount the data is that you put in the moving average, the more representative it is of the broader overall price trend, and the more important it is. So, for example, now when we have the slower one cross above the faster one, it means the shorter-term trend is crossing above is exceeding rather a longer-term trend here. So it's telling us that to the shorter term, momentum is rising, price action is on the move upward.
Yeah, and Alan, how would you interpret that when the shorter end there is moving higher in the way it's doing that? That would normally be a bullish call, right? A bullish, yeah, well, call. But yes, it'd be a bullish move or a sign, right? Tell me about a pro's interpretation in your eyes.
Right, it's a positive. It adds optimism wins. It's a positive contributor to the overall thesis. A lot of times, in my opinion, moving averages are kind of a lagging indicator. So I'm just more of a pure price guy, and I look to see how stocks hold or fail to hold significant levels, and that 80 for me is really what this just simplified this whole process. I have the right to be long from 80. That's something I'm very comfortable with in this stock, considering that would be about 20% off its highs, and look forward to play catch up with the rest of the market. Again, the macro market has had another major snapback. We didn't quite make new highs, but if you look at the distance of the drop from the on that old top that targets S&P 5,000. And that's happened every time in history. So I still remain very optimistic across the board, and I look for stocks like this that maybe haven't participated to the same, to the same rate as some of the others have.
I don't know if you commented on it already, but just a quick thought, Alan, before we move on that RSI. He did note, Rick did note that that trend was pulling back there.
And that's why I trade options, because I don't have to be as precise. I'm looking at a January option. It's going to act like the stock. It's got a pretty solid delta. So it's a stock, instead of buying the shares of the stock, I'm buying a limited risk option for premium. Is trading around 8 or 850 right now. So I know what my maximum risk is, and I have more staying power and ability to ride through some ups and downs and look at things more on a weekly basis than on an hourly basis or a day-by-day basis. So I can look to see if that RSI can get more positive in the future, and that's what we want to see if we get another move to the upside in MU.
Okay, and I know you were eyeing $100 even, so we'll wait and see on that one. How about Weibo? When we look at this Chinese-based social media type company, Alan, your thoughts as you were looking at this one?
Well, this is another example of why I use options. This stock is bad enough to buy. I mean, it looks terrible. It's been straight down from 65 down to 30. It's down 40% in the last 3 months. There's all kinds of things happening, but technically, it looks like it's set up for a short squeeze or at least a bottom-based bounce. You're seeing bullish divergence. It made new lows, but volatility didn't make new highs. So there's not as much fear in this new sell-off as there was in the past. It's very much a positive, and that's a lot of times how bottoms get put in, because these short sellers are running out of strength. So I'm looking at this 30 level as an important level to keep an eye on. It's traded between 30 and 60 over the last 2 years, so that 45 is kind of a magnet target on the upside if and when you can get some of these short sellers to cover their positions and start buying back and taking their profits. It can snowball effect to the upside. So I'm looking at an April 25 call, which is below that 30. The April option has 4 full months of time. It's trading for about 10. It's about $8 in the money. It's got an 80 delta. So again, it's about not being precise. I'm not trying to pick the exact bottom, but I'm going to be in position if and when you get this bottom blast and you see this short covering squeeze in this stock that has been absolutely straight down.
All right. So not a beautiful chart there of Weibo. Rick, what are you thinking?
Yeah, it's kind of a rough time to be in Chinese stocks in general, but I thought the 30 level was significant as well. Looking back on the chart, I didn't bother sending it back this far, but that was where things tended to bottom out back in mid-2020. So just going back from a historical perspective, this could be a pertinent price point to keep an eye on. So point A is where we are right now on this chart, between that 30 level, as well as the recent highs that we just saw a couple of days ago near the, 33 level, I believe. So looking up to point B, that would be the next point to keep our eye on if things do start to turn toward the upside. That's our 21-day exponential moving average. So this is another way that you would use moving averages would be if the stock is in a downtrend, the moving average would be a point of resistance. So that might be a point to make a short play. And vice versa for if it's in an uptrend and it hits the support of the moving average. So looking at our more recent trend lines here, I was looking at the highs from July, just trending downward from October and November, and I just extrapolated that trend line down to the bottom as well. I just duplicated it, and sure enough, using those post-earnings lows near August, that's about where we bottomed out within the past week or so. So that's another interesting way you can use trend lines to try to gauge where things might stop out. And just looking at the RSI, we are indeed in that oversold area. That's not necessarily a sign that it's going to, rocket out and reverse things, but keep your eye on it for if it does cross out of the overbought area and prices making a strong move upward as well for greater confirmation, Nicole.
Right, and that would make sense. I love that chart. I mean, I think we're all geeks at heart, and we love all the charts and lines. Alan, when you take a look at that and we see the oversold area that you probably could get back up a little bit, at the same time, what kind of risk do you think is involved here with your trade, Alan? How risky is it? How concerned are you to another leg down, for example?
Well, it's very possible. Yes, things are oversold, but they can always get more extreme oversold. That's the truth. But That's why I'm going out with an April option. April has 4 full months of time, and I'm so deep in the money. Think about it. If you wanted to buy this stock, you say, okay, maybe I want to buy it at 25. Would you put in a limit order and buy it at 25? And are you comfortable with that? Well, that's what this strategy does. Gives you the right to be long from 25. That's significantly lower than where the market is right now. So I'm deep in the money. All I'm looking to do is go a little bit deeper in the money if the stock moves up. So it's going to pay off very, very well from just a modest move if we can get a little squeeze going here. And that typically happens after an extended move to the downside when you see this in the stall out that we've seen in the sellers with this volatility not increasing. So there are a number of positive things here that tell us maybe that the worst might be over. But yeah, that chart looks terrible. That's why I use the strategy that I do. I'm not just saying that the bottom's in and this is it. I'm saying over the next 4 months, we could see some profit taking by these short sellers.
Yeah. Okay. Let's get to another one that doesn't have such a beautiful chart. The last high was back in February for SunPower. And in fact, JP Morgan has their underweight rating at $27 target. I'll start with you, Alan, as you're taking a look here at SunPower. Your thoughts?
Well, SunPower is a stock that did have a bullish divergence bottom and had a big bounce. Okay. So now it's cycled back through and it's come back down within that trading range between 20 and 30 for the last 8 months. So this 25-ish level where it was yesterday is an important pivot that we want to keep an eye on a weekly basis. Again, it's range bound after having an extended move and coming back as stocks often do. Now, it's negative for the year. Like you said, it's 50% off its peak. So from a money management standpoint, from risk reward, I like where we stand. A range breakout here targets 40, which is a very modest move. I'm looking at a June call. June option has 6 months time, so I'm extending my duration. First play was January. My second play was April. This one is 6 months of time. There's more uncertainty in this particular chart, in this particular stock, but I like the way it's set up. I can buy a June $20 call. It's trading for about 6.25 or so. It's $4 in the money. It's got a 75 delta. And if we get to that range top, the breakout target of 40, then this option doubles in value. But let's remember, 6 months of time is a lot of time for good things to happen. And I like this overall sector, and I like the fact that it's come back and it's stalled out and it's reset itself for one more move.
All right. And Rick, take us through the technicals. Do you think this, as he's going way out here, he said, right? Alan made the point that 6 months is a good amount of time to make some of these moves. Rick, your thoughts on the technicals?
Well, SunPower's definitely got some clouds on this chart here, and it's looking like more of a descending triangle type pattern in that we've got a sloping trend line going down from the highs with support running kind of steady just above 20 there. So we're down about 30% since November 1st, hanging out just below that 252-day exponential moving average near point A. And we gave up all those moving averages in a hurry there. Right now, we're seeing the opposite of what I talked earlier of the golden cross. We're seeing the death cross there at point B, which is the faster moving average crossing below the slower one. And right now, as of today, it's looking like down there at point C, the RSI is crossing over into the oversold area once again, which is typically interpreted as being bearish, Nicole.
All right. See, we got some good lessons today. I love it. It's great to see you both. Nice big three. Alan Nuckman, thank you so much of bullseyeoption.com, and Rick Ducat, thank you both very, very much. Good to see you. Great big three today. Coming up, it's a 360 Spotlight. We will focus on